Kharif paddy production. The lower sowing of Kharif pulses could also cause some pressures. The delayed withdrawal of monsoon and intense rain spells in various regions have already started to impact vegetable prices, especially tomatoes. These risks to food inflation could have an adverse impact on inflation expectations. The Indian basket crude oil price was around 104 barrel in the first half of this year, 22-23, and this is the actual number which has been realized. In the first half of this year, the Indian basket price was, the average was around $104 US dollars per barrel. Going forward, we are now assuming it to be $100 per barrel in the second half of this year. Taking into account these factors, the inflation projection is retained at 6.7% for the current year, with second quarter at 7.1%, third quarter at 6.5%, and fourth quarter at 5.8%, with risks evenly balanced. CPI inflation is projected to further reduce to 5% in the first quarter of next financial year, that is 23-24. The extraordinary global circumstances that caused the heightened inflationary pressures have impacted both advanced economies as well as the emerging market economies. India is, however, better placed than many of these economies. If high inflation is allowed to linger, it invariably triggers second-order effects and unsettles expectations. Therefore, monetary policy has to carry forward its calibrated action on policy rates and liquidity conditions consistent with the evolving inflation growth dynamics. It must remain alert and nimble. I would now like to focus on the liquidity and financial market conditions. During the current financial year, the weighted average call rate, that is WACR, the operating target of monetary policy, has increased cumulatively by 196 basis points, that is 196 basis points in a phased manner up to September 28th over March 22. This is in sync with our actions on the SDF and the repo rate. Consequently, interest rates across financial market spectrum have increased, though at varying degrees. Surplus liquidity in the banking system, as reflected in the average daily absorption under the liquidity adjustment facility, that is LAF, including both SDF and the VRRR auctions, moderated to 2.3 lakh crore during August to September, that is during this period of August and September up to 28th September, it moderated to 2.3 lakh crore from 3.8 lakh crore during June-July. So it was 3.8 lakh crore during June-July, and in August-September up to 28th September, the overall system liquidity has moderated to 2.3 lakh crore, and that is evident from the overall LAF position and taking into account both SDF and the VRRR auctions. GST and advance tax payments coupled with forex outflows moderated the surplus liquidity conditions in the third week of September. This necessitated recourse to marginal standing facility by banks and liquidity injection by the Reserve Bank through variable rate repo auctions. And this is exactly in line with what we had said